and welcome. You tune into News Now, and we're talking about the earnings candidate, heavyweight Dr. Reddy's a nifty candidate. Dr. Reddy's that reported its quarter four numbers after market hours yesterday. Let's take a look at how the numbers fared then. As far as Dr. Reddy is concerned, we had a rather mixed set of numbers coming in. If you look at the revenue, that saw a jump up of 19%. It came in at 8,528 crores versus 7,113 crores on a year-on-year basis. We also saw the profit ticking up 21% on a year-on-year basis. The EBITDA was up 14%, and margins, however, saw a decline at 24.3% versus 25.5%. Now, the revenue was largely a beat. The profit was also a beat, but like I mentioned, the EBITDA and the margins were a miss for Dr. Reddy. So a mixed set of results coming in, and so it is a wait and watch at how the stock is likely to react on Monday's trading session. But let's get on board the management for Dr. Reddy's, who will be speaking to us about how the results have fared. Let's get on board. Erez Israeli is joining us now from Dr. Reddy's Laboratories. Hi, thank you so much for joining us, Mr. Israeli. First up, what has led to the decline in the margins here? Now, we see a beat coming in on the revenue, on the profit, but margin has been a miss. So what led to this decline? Is it the pricing or the overall cost? And what will be the guidance for margins going ahead?
Yes, we're normally happy when the margins are around 25%. Margins can be varied because of mix of markets, mix of product, price erosion. So it's primarily about mix, but I think it's very healthy. As long as we are 25% plus, it's considered healthy, and we are happy with that.
Right. Also, tell us, Mr. Israeli, will you maintain a 25.5% margins in FY26 as well?
Yes, so we are still aiming for the same. It may fluctuate from quarter to quarter, but the overall, we feel that 25% of EBITDA allows us enough total shareholder returns, as well as allow us to invest enough in the future. So we still want to be in this neighborhood, and we feel comfortable that we can achieve it.
Right. Also, tell us about your US business is up almost 9%. Last quarter, the US business was hit by low Revlimid sales competition in a few products, loss of market share, and the price erosion. Is the pain over? Is the pain still on? What is the situation right now on ground?
This is a normal situation in the market that as it's related to supply, it's business to business supply, and as it's related to the timing of launch of new product as well as RFPs of products. So sales can fluctuate from quarter to quarter. But the overall is that we are growing in the United States. We are gaining market share. We are growing faster than the market. And we are planning to launch 18 to 20 products in FY26 as well. So overall, we feel very, very good about the United States. It's a very important market for us.
Right. Also, January 2026 is the date when the settlement period ends for Revlimid. How do you intend to fill the gap other than the Semaglutide launch?
The growth of the company will be consistent on four levers. One, we are growing the base, not just in the United States, also in other markets. All the markets are growing. And the level of growth of the base, if you look at the double-digit approach, is more than 3,000 CR of additional sales growth. So it's a significant contribution. The second is, in addition to Semaglutide, we will have in the future also biosimilar like abatacept. I just want to remind that we still have, as part of the year, also linadulamide for part of the year. And in addition to that, we are doing BD. We are licensing product, we are acquiring asset, and we have a financial capacity of around $2 billion that we can use if we need to, leveraging our healthy balance sheet. And in addition to that, we are always adjusting our cost structure to the relevant segment in the sales. So productivity will also allow us to grow. So between growing the base, let's call it big or special products, BD, as well as productivity, all those levers will contribute to the growth. Also post the arrangement on lenalidomide.
Right, Mr. Israeli, when should we expect the launch of semaglutide then? When is it on the anvil?
So it's of course depends on the patents and the in the relevant markets. But let's say in the calendar 26, quite a few markets will be opened, and we are planning to launch and to have a day one launch in all of them.
Right. Also, in India, the cardiac and gastrointestinal therapies were highly impacted last quarter. Is there any revival in this quarter?
So our India business is performing well. We are growing in double digits, comprised of all the activities that we do. Um, as we are doing for quite some time, our primary activity is actually moving into specialty, moving into innovation, bringing product with a better standard of care to India. We launched quite a few products this year. We are planning to do it also in the future, primarily licensing it in or acquiring it from other companies, innovative companies. Also, their branded generic did reasonably well. Um, uh, yeah, we do have some brands that did not, and we are planning, of course, to deal with it. But overall, we grew very healthy double digits, I think around 16%, and we are planning to do the same also in the next coming years.
Right, Mr. Israeli, what is the kind of update on the launch of rituximab and the denosumab in European Union, and what is the progress on the GLP-1 opportunities in Canada, India, and also the other emerging markets?
So we are planning to launch both products, rituximab in September and denosumab just immediately after. We will also launch the same products in the United States in thereafter. And as a preparation also for the launch of abatacept that will happen in the beginning of 27, as well as in the subcutaneous in the beginning of 28. The preparation for the GLP-1, especially semaglutide, is on, and we are planning to launch it at any place that the patent landscape will allow us to do that.
Yeah, so the company has said that the company will pursue strategic partnerships and inorganic opportunities. Can you tell us more about this, and what is the company really eyeing now?
Certainly. So we are really keen to bring better standard of care of products to India and emerging market. This is where we are focusing on. We approach all the innovators around the world from all the relevant areas, United States and Europe and Asia and etc. And primarily in the area of anti-cancer, but also in diabetics, also in immune product, and as well as others, primarily to bring better standard of care. We are either licensing it or having a partnership or even acquiring it if it's relevant. We believe that these are the kind of products as India progress and the need of society is a better standard of care, and there is a new set of patients with the ability to be treated with and to afford it. We believe that this is the place for us. So this is one set of activity. As you know, we also acquired consumer care product, especially the NRT, as well as doing the deal with Nestle. And we are also looking for opportunity in the generic arena as well. So all segments, generic, consumer care, innovative, and biologics, we will be busy with business development.
Right. Also, tell us what kind of growth should we expect from Dr. Reddy in FY26? Give us some color on that as well.
So we want to grow in the same way that we grew until now. We are trying to be very consistent to have both healthy growth, which is normally a double digit, as well as have healthy margins, which are normally around the 25%. We feel that with that we are serving both our shareholders as well as allow us to invest enough for the many years to come. So that's also our aspiration for the next near future.
Right, Mrs. Reddy, thank you so much for taking the time out and joining us and weighing in on the growth roadmap ahead for Dr. Reddy and the numbers. Thank you for joining us today. And well, with that, it's a wrap on this edition of News Now. I'll take care, Lee. Thank you so much for tuning in.